There's a significant shift happening within the Social Security system that most Americans over 60 have no idea about. This isn't a rumor or a political promise, but a confirmed, locked-in change that takes effect on the 1st of March. If you are currently collecting benefits or plan to soon, this directly affects the deposit that hits your account. It's frustrating because millions of hardworking Americans spent 40 years paying into this system through every single paycheck, trusting that when the time came, the government would deal with them fairly. Now, when changes this important occur, the details are often buried in bureaucratic language that is difficult to understand. We are going to break down exactly what changed, what it means in real dollars, and what you need to do right now to ensure you are not leaving money on the table or caught off guard by a reduction you never anticipated. Let's start with the basics so everyone is on the same page. Social Security is not a handout. It is crucial to be clear about that. You earned this benefit. Every dollar that comes from your Social Security check represents years, sometimes decades, of hard work, sacrifice, and contribution. You paid into this system throughout your entire working life, and you deserve to know exactly what is happening with your money. Right now, something significant has changed, and official newsletters haven't exactly been sent out about it. The confirmed update that takes effect on the 1st of March involves several layers of the Social Security system. We will walk through each one in plain English, without government jargon or confusing bureaucratic language, just the facts presented clearly. Let's begin with the cost of living adjustment, commonly called the COLA. This term is often mentioned, but many people don't fully grasp its impact on their monthly check. The COLA is the government's way of adjusting your Social Security benefit to keep pace with inflation. Each year, the Social Security Administration examines the Consumer Price Index, which measures the cost of everyday goods and services, and adjusts benefits accordingly. For the year 2025, the COLA was set at 2.5%. Some might think that doesn't sound like much, and it's understandable to feel that way when filling up the gas tank, buying groceries, and watching expenses rise everywhere. 2.5% can feel inadequate. However, this adjustment is now officially reflected in your March payment. If you haven't reviewed your actual benefit amount recently, it's time to do so. For the average recipient, this increase translates to roughly an extra $50 per month. While $50 might not seem life-changing, over a year, that amounts to $600. For a couple where both receive Social Security, that could mean an additional $1,200 or more annually. That money is real and it matters, and you should know exactly how it applies to your situation. The March 1st update involves more than just your base benefit amount. It also connects directly to the Windfall elimination provision and the government pension offset. These two rules have quietly reduced the Social Security checks of millions of Americans for decades. If you worked in a government job, for a school district, a fire department, a police department, or any public sector role where you received a pension not covered by Social Security taxes, pay close attention. This could mean thousands of dollars back in your pocket. The Social Security Fairness Act was signed into law, eliminating both the Windfall elimination provision and the government pension offset. These provisions were originally designed to prevent what the government called double dipping, collecting both a full pension and full Social Security benefits. However, many of these workers, including teachers, firefighters, police officers, and postal workers, also held second jobs, worked part-time, or had spouses who paid into Social Security. Their benefits were slashed, sometimes dramatically, by these provisions, with reductions of hundreds of dollars per month for people who genuinely earned every penny. With those provisions now eliminated, the Social Security Administration has been processing retroactive payments and adjusting monthly benefits for the approximately 3.2 million Americans affected. March is a significant month in that timeline. If you or your spouse worked in a public sector job and have been receiving reduced benefits because of these provisions, you need to contact the Social Security Administration now. There may be back payments owed to you, and an updated monthly benefit amount should be hitting your account starting this March. Now let's address Medicare, as this is an area where confusion often costs people money. Your Medicare Part B premium is deducted directly from your Social Security check for most people. In 2025, the standard Medicare Part B premium increased to $185 per month, up from $174.70 in 2024. So, while you receive that 2.5% COLA increase, Medicare simultaneously deducts more from your check. This is a factor to consider when looking at your actual net Social Security income for March and beyond. Something many seniors don't know, and it's frustrating because it costs people real money each year, is that if your income is above a certain threshold, you pay more for Medicare Part B. This is called the Income-Related Monthly Adjustment Amount, known as IRMAA. The income thresholds for IRMAA were updated this year. If you, or you and your spouse together, earn above $106,000 annually, you fall into IRMA territory, and your Medicare premium is higher than the standard amount. For some, premiums can be $600 per month or more, deducted directly from your Social Security check. If you experienced a significant drop in income recently, perhaps you stopped working or had a major financial event, you can appeal this determination and potentially get that premium reduced. Most people are unaware of this and simply accept the government's determination. Don't be that person. Let's also discuss what's happening with Social Security earnings limits, which affect those still working while collecting benefits. If you are under full retirement age and still earning income, Social Security has a cap on how much you can earn before benefits are reduced. For 2025, that exempt amount increased. You can now earn up to $22,320 per year without any benefit reduction. If you are in the year you reach full retirement age, that limit jumps significantly to $59,920. It's important to understand this rule correctly. If your benefits are reduced due to the earnings limit, you don't lose that money forever. Social Security recalculates your benefit at full retirement age and credits you for those withheld payments. However, it still affects your cash flow in the present, so understanding where you stand is important. A moment should be spent on Social Security taxes, as this catches people off guard every year. Yes, your Social Security benefits can be taxed by the federal government. It may feel wrong, having already paid taxes on the money when it was earned, only to be taxed again when collecting it, but that's the reality and needs to be planned for. If your combined income, which is your adjusted gross income, plus any non-taxable interest plus half of your Social Security benefits, exceeds $25,000 as an individual or $32,000 as a married couple, up to 50% of your benefits can be taxable. If your combined income exceeds $34,000 individually or $44,000 as a couple, up to 85% of your benefits can be subject to federal income tax. While this hasn't changed dramatically with the March update, it connects to how you should think about your overall retirement income picture. The Social Security system is complex, and it was never designed to be simple. This complexity often benefits the government more than it benefits you. When people don't understand the rules, they don't ask the right questions, they don't appeal incorrect decisions, and they simply accept whatever check arrives, assuming the government got it right. However, the Social Security Administration makes mistakes. Benefit calculations can be wrong, people qualify for adjustments they never receive, and retroactive payments go unclaimed simply because people didn't know to ask. This week, take action. Pull up your My Social Security account online. If you don't have one, create one today at ssa.gov. Review your benefit statement and earnings history. Ensure every year of your working life is accurately recorded, as your benefit is calculated based on your top 35 earning years. Errors in your record could mean you are receiving less than you are entitled to. It's not complicated, but it requires taking 20 minutes to examine the information on file for you. If you were affected by the windfall elimination provision or government pension offset elimination, call the Social Security Administration directly at 1-800-772-1213. Hold times can be long, and it can be frustrating, but if you are owed additional money, that effort is worthwhile. Some people will receive thousands of dollars in retroactive payments, money that belongs to you. If you believe your Medicare IRMAA determination is incorrect, or your income has changed significantly, file a life-changing event appeal using Form SSA 44. You can download it from sa.gov or pick it up at your local Social Security office. Don't just assume the number on your statement is final. If you are still working while collecting benefits, sit down and calculate where your earnings stand relative to the annual exempt amount. Understand how the earnings limit applies to your specific situation to avoid an unexpected benefit reduction. Over the years, one key observation about personal finance is that the people who come out ahead are not necessarily those who made the most money. They are the ones who paid attention, asked questions, and didn't assume the system was working in their favor. They verified information, they appealed when necessary, and they showed up for themselves financially in a way that many people do not. You worked your whole life and paid into Social Security for decades. This is your money. Every update, adjustment, and rule change matters because it directly affects how much of your own money you actually receive. The 1st of March is not just another date on the calendar. It's the date when several confirmed changes officially take effect. The difference between knowing about this update and not knowing could mean hundreds or even thousands of dollars over the coming years. Don't leave that money sitting on the table. Don't let the complexity of the system become an excuse for inaction. You deserve the full benefit of everything you've earned, and today, you have the information you need to secure it.
Yeah, grind mode on, can't kill my drive. Turn the pressure up, I come alive. Grind mode on, I don't fold, I don't quit. Hunger in my chest, every beat I commit. Eyes on the prize, no sleep till it's won. World in my hands when the grind mode's on. Wake up with a vision, I'm locked on the target. Turn pain into fuel, I'm a flame, I spark it. No shortcuts here, I embrace every test. Pressure on my shoulders, still I handle it best. I was made for the climb, every loss, every scar. Built me in the steel, now I shine like a star. If the road gets rough, I just double my speed. Ambition on 10, I was born to lead. Grind mode on, I don't fold, I don't quit. Hunger in my chest, every beat I commit. Eyes on the prize, no sleep till it's won. World in my hands when the grind mode's on. They said limits exist, but I shattered the frame. Every wall in my path is just fuel for the frame. Discipline heavy, but my spirit is free. I don't chase success, success chases me. I'm the storm and the calm, I'm the rise, I'm the proof. Every bar that I drop is the grind in the booth. Blood, sweat, tears, that's the code I trust. I don't wait for the crown, I earn it, I must.